The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman here, bright and breezy. This is 8:06 a.m. This will be recorded, played again in 2 hours' time for my usual hour, 10 o'clock to 11. So what we're looking at on the 17th day of February, Friday, options and futures expiration, we're looking at the Dow closing at 33,696. You'll see I drew this midpoint line here to say if it starts to break under it, all of a sudden you've got the cup formation and the arch formation all within a rectangle, and we're kind of stuck in that rectangle. Let me just show you the YM, which is the futures. You can see the YM has gone below the middle of the trend line. It is down 161 at 33,578. There's the continuous contract of the E-mini. I like to do that because that's the way I can get the weekly and monthly chart. Otherwise, I couldn't get that. And you can see it's stuck in a range here, and 4,044 is the 200-period exponential moving average in the daily. Made a peak G in the Chapman wave in the daily chart. Here we are looking at the, let's go to the NQ, that's the futures. NQ making a dreaded H pattern. What is that? That's a particular pattern that I talk about all the time. You can go straight line up or down, arch formation or cup formation or a combination. You can see here it came down, then there was an arch formation, took out the left side low, made another straight down move, almost an A to B equals C to D, 1 to 1 to the extension to the downside, 200-period moving average right there. And this is the pattern that we're looking at. It's red because if it makes an arch formation, fails at a peak A or a B, first peak or second peak, takes out the left side low, can go a lot lower. But that 200-period moving average now is going to be a very strong support level, and that is at 12,000. This is on the Qs, the futures, 12,318. So let's just say 12,300 is going to be key. A close below 12,270, say, says you've got another H pattern and it's fading. We'll see what happens here. But you can see what's happened in the weekly chart. It went above the resistance area and has pulled back. It's really digesting very big gains. Looking at the IWM, that's the Russell 2000, trading down $1.08 at 191.02. Let's go to the RTY. I think I've updated that. Yes, made a peak E, also doing this dreaded H pattern, but it hasn't taken out the left side low. It's trading at 1932, down 12. If it starts to trade underneath the low of the 10th of Feb, 1906, goes to about 1902. There's a real good chance that the 1989 200-period moving average will be tested. So far, all we're doing here is correcting an overbought situation. It could be much worse, but so far I'm just saying that this is not bad. I mean, down 161 after all the bad news last night, going into the afternoon session where we had, I wanted to show you this. I was asked if I could show in greater detail the pattern that I was talking about yesterday. Where is it? Was that in the... Yes. So what we were looking at is from 9 a.m. yesterday at 41, it was under 4,100. It was 40.098. Yes, 40.098 at 9:40 yesterday morning. Starts a peak A, peak B in the Chapman wave methodology. We're always looking to identify the lowest low bar, then count each successively higher peak, alphabetized sequentially A, B, C, D, E, F, G, but it's that fourth highest peak, peak D, where other things can happen. You can see right here, it does get upgraded from a buy signal to a buy mode, meaning that it should get to a D at least. And that's exactly what happened here with the walking the 9-period exponential moving average right here in the 10-minute E-mini chart, goes to peak A, peak B, flattens out, goes to a C, and then has a big spike for 3 bars, goes to a peak D, and that is at exactly just before 1 o'clock. That is at 10 minutes to 1 Eastern time. And look what happened. It walked the 9-period moving average beautifully, but look what happened to the stochastic. The stochastic started to fail right there. So if you had to do a measure, I don't want to make this messy. Yeah, it doesn't matter. You see this vertical line are technically good. The MACD and stochastic and the on-balance volume were, but at this particular one right here, the MACD was narrowing, but still good. Stochastic was way weaker, and the on-balance volume was good. So you had to wait for a turnaround. As soon as it took out, the 9 went under the 14-period moving average. You can count the number of bars. I think it's 20 bars. So it's oops, I didn't need to do that. Let me just get rid of that. So it's 20 bars up and 20 bars. I love the sequence, the symmetry of the left side prices going from a low to a high, makes a peak D in the Chapman methodology. Remember, D's where other things can happen. And then what does it do? It starts coming down, makes this dreaded H right here, fails, takes it out, and plummets down. And 20 bars later, it hits exactly, look, right here. See that? Nope, this one here. There, you see that little black dot? Look at that. It hit it to the bar. 10 bars up, 20 bars up, 20 bars down. Comes down, goes sideways in a rectangle formation. A rectangle formation can last a lot longer than your patience. It's an attempt to go up, but if it takes out the support line, the horizontal support line, be careful, it can go a lot lower, and it kept walking all the way down. Now it's in a rectangle again. It's slightly wider, but it's still already a narrow rectangle, and we're going to see what happens over the period of the day. My assessment is that there could be one quick dip to test the support line, but if at any stage, and I mean it, not just a pop to the upside, if 3 10-minute bars can close nearer to the high that was made at 2:40 this morning, early this morning, at 40.83, that's only 10, 11 points higher. If it can hold there for 3 10-minute bars, you can start to move towards the next higher high and just go step by step. But so far, I'm kind of impressed at what I'm looking at here. Just on the short term, I wanted to show you this GCS gold. Gold's making a beautiful bull formation. It went to a peak C right there in the 10-minute chart at 10 to 8 this morning at 1837.9. And it just has to go to 1838, and that starts a leg D. So gold is down 14 points. I'm not talking about the actual move from yesterday up at that peak F top right there at 210. That was 10 minutes past 4, 10 minutes past 2 yesterday. We're at 1854.8 in the continuous contract. It just went tumbling down. And look at this. If you can just use this one technique where the 9 goes under the 14. And look at this. You would have been home all the way from where it crossed negative at about 1848 all the way to right there at 1833. That's just, I'm talking about a 10-minute chart. Remember, you can't get too carried away. All right. So within that context, we've just had a gold make a peak F in the daily, pull back sharply, now it's trying to rally again, coming off the low. Okay. Within that context, let's get back to the markets. I wanted to do this because we've got a 3-day weekend coming up. I'm doing the early show. I'm not able to do it at 10 o'clock today. So let's just go through these things. We're looking at 8:14. The RTY is down 11. And now we're going to go to silver. Silver is trading. Silver is trading down 31 cents at 21.40.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kakestat's Tiger Forex Report. Teddy Kakestat breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi, folks. We're back. So since Friday is always technical Friday in the Chapman Wave methodology, look at the symmetry here. You've got, this is the gold contract. Here we go. So from that peak F in the Chapman Wave right there, in the 1 minute gold contract, continuous contract, it's gone to the exact same high. Here we go. Make that green. There's your left side, right side price symmetry. It's got another couple of bars to go. It's got until 8:21 to go one tick above. So 1877.8, 1877.8.8. I don't know if it can do it, but it's got, this could be a Chapman Wave C1, C2, like this. Look, C, because it had all the characteristics of a D, just didn't get that fractional 20 cents. But we'll see. But look at the 10-minute chart. Look at that beautiful symmetry right there. It broke above it, but now it's still struggling to try to make that extra 10 cents to be able to get to the leg D. So you've got peak C1, C2 in the 1 minute chart, and you've got peak C in the 10-minute chart. We'll see if it can pop higher. Look at this, ESH23. This is the E-mini. So this is what I did. Every once in a while, especially in the futures, I have to use, and it's a part of the technique. It is not something that I make up arbitrarily every time. Every once in a while, look, when you get to a G, there's never an H. There is no H in the Chapman Wave methodology. So G says you got to recount to see if you missed something. Well, there's no other count. G is G right here. I cannot go and pull back. So higher than that says that I've got to call that a brand new A. But every once in a while, I need to use what I call a phantom peak. In other words, if there are parallel highs, especially in the futures when you're trading in 25 cent instead of 1 cent increments, I used this. I even typed it in. I did this live in the den. I showed this. I made this a phantom peak, peak A. MACD was good. Stochastic was really strong. It was up in the 80-something% area. I made that a peak B and then a C. And I looked at it and I said, no, this is not right. Everything about this says that stochastic failed. It went back under the 80% area. I think I have to use another phantom peak. Well, I wasn't trading, but if I was trading, I would have got out and said, hey, I could be wrong. There could be a C and it could still go higher. but I want to be careful. So I had two phantom peaks, phantom peak A, phantom peak B. It went to a C, and then that D said I was ready for that rectangle formation, because if it took out the base, you'd go 1-to-1 to the downside. Well, it did that. That's the 1 minute chart. You don't even have to know what it is. I'm just showing this particular instance here, and now it's struggling. And here's the rectangle. When you're in a rectangle, not you, when any price that you're following is in a rectangle, it can stay there for a long time, especially if it becomes a narrow rectangle. But the wide one says, look at this. Here's the Dow. This is the S&P. Remember the rectangle? I said if it breaks the halfway marker, it could go to the bottom and take out the left side low. It did exactly that for silver. Silver will be very weak. Let's go on. Let's look at high-grade copper, HG, high-grade copper, continuous contract, just sideways. It too now is in a rectangle, another rectangle formation. Big rectangle in the weekly chart. I call this the large rectangle, which could go to a D or an E in the same time frame if it makes higher highs and higher lows after the sharp initial pullback. Well, the high that was made was 4.62, was it? No, 4.36. No, I'm not right. 4.58, the week of the 3rd of June. And then it pulled back all the way to under 320. And then it goes back, and where does it stop? Well, right there, the peak E underneath the previous high of it goes to 4.35. And now it's showing that it hasn't got enough strength to get past that A. It says it could be stuck there for a little bit longer. Let's go to crude oil. Crude oil at this particular point is trading sharply lower, down 2.41, probably afraid, the world is afraid again that there's going to be some kind of a recession and that crude oil will not be in demand, but it's in the low range. It's just stuck in a range. We've been talking about this for some time. Look, there it is, stuck in a range at the bottom, a rectangle at the bottom. It says at some point it should go under that and then start a move that tries to get above into the 85s. But right now, 70 is absolutely key support, and it's trading at 76.33. Okay, I wanted to show you this. DXY. So the dollar is in leg, we are still long the dollar, leg B, going towards the 200-period moving average. It is so close right now at 104.57. The 104.74 level should be touched. It was touched before the peak B, and then it failed. But now the technicals are way stronger. And that says that this consolidation that we're looking at in the general market, if you base it on the strength of the dollar, which sometimes happens, making gold weaker. Look at this, yes, gold at the 200-period moving average. It went under it. It's holding right on it. That says this kind of mix is coinciding together with the market being a little vulnerable. The reason why for about a week and a half I've been saying, I know we can go a little higher, but I don't like this. We're not adding any positions to the long Dow and UDow, the 3 times long. We are instead, we had considered the SPXS, the 3 times short. I just didn't want to do anything. It's been so difficult because look, yesterday, let's just say SPXS. I haven't notated this for a little while. This is a peak B. So how would you have done this yesterday? You would have been wrong. In the beginning, you would have been right. And then you would have been totally wrong as it pulled back and it went down to, let's see, 17.54. And then it closed at the pink 9-period moving average of 17.55. And today it's at a high right now of 18.69, but the day's young. It's not even above where it was the other day. So this is a tough one to play in terms of timing. You can have a fairly wide stop. I didn't want to have a stop. I just decided we'll remain in a high cash position, and we're actually waiting. We're waiting for a week and a half for certain two particular sectors to pull back. All right, so I said in the den, I said that I will be going through a bunch of things. I was asked yesterday, have I done everything? No, I haven't. The TLT is pulling back sharper so that yields are going higher. That's also scaring the market a little bit, made a peak F. And the TBT is running some. It's in a leg peak A, peak B. It's in a leg C right now. And if I was to do a left side, right side price time match to give you a sense of when this particular rally could be over in the yields, let's just do this. I don't know if it has to go there, but I'm just going to put it in. This is the peak D that was made at about 30, just 32, 35-ish. I'm just going to put this in. I don't want to go all the way to the side where the low was. I'm going to go to this particular candle right here for the moment. And I'm going to go to the right side, make it green. And that says that yields, right there. Yields could rally a little longer. It could go all the way into February the 24th. What is the 24th? It is Friday a week, all the way through February. There's a chance that we could have a correction that goes a little bit longer in February. We'll see. Here's what I've done here. You have to ignore that little flip to the bottom, and we'll see if this works out, because the Chapman Wave inside wedge is really the thing that gives you the good clue. Yep, there it is. Yeah, so that says yields can go a little bit higher for about another 5 sessions, maybe, for the week. And coming week, it's a short. We'll see what happens. In the meantime, yields are running, and that is making the market.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Hi folks, we're back. So here we go. This is going to be the 8:30. There must be some economic news coming out. Let's just get the futures up right now. Let's see. It is a minute machine. I think it's coming up right now. So look, you've got your arch formation, you've got a second arch formation, and now comes the key test. Is 40.68 going to be taken out or 40.76? And that's what we're going to be watching very closely. Just do this. Look, the rectangle formation says you can stay in this rectangle for a little while still. Look, just trading up and down until it breaks significantly into the 40, 83, 85 area. We're just stuck. And until it breaks down below 40, 63, we're just stuck. So here we got 8:30. There it goes. Peak A, peak B, leg C. Is it going to hold? It's going to mean nothing unless there's a big move above this particular rectangle right here, rather than a break of the support. whatever the news is, the economic news, the market is taking it as if to say, well, nothing to see here. We're not going to plummet on that, and we're not going to rally on that. You're going to find a brand new excuse to do whatever it is. So we just stuck in a range. All right, let's get back to this. So the semiconductors, SMHs. There's a pattern I discussed very concisely yesterday. First of all, there's a one-to-one. This is a Chapman wave parallel extension that I talk about. Yes, it looks like the A to B equals C to D, but in my case, I have to treat it. It needs to go in a parallel motion. In other words, a parallel motion to the angle that it's at. And that's what you want to see. The number of bars up must equal about the number of bars up going to that particular point. So what are we looking at? Semiconductors down 2.24 right now, pre-market at 243.69. These rectangle or cup formations unfold all the time. So until the semiconductors start to close above this high right here of 253.77 on the 14th, and then it can tackle the left side high, that's 254.60, and then it can go to the peak D high that was made on the 2nd of Feb, which is 255.64. You're just stuck in this range. So talk about stuck in the range. Look at this. This is the rectangle that I drew, right? How often are you going to see this? And it says this is peak A. There's A. There's B. There's C. Have you got the technicals? Yes, the MACD is improving. The stochastic is 47% on balance. Volume is acting quite nicely. But look, L. Finally, you've got the 9-period moving crossing positive, and that's a good sign. It says this could turn out to be quite a nice rally, just on the very short term. But what it's doing is this peak A, peak B, peak C in the 10-minute chart says there should be. It doesn't have to be because in the rectangle, there should be an attempt to get to a leg D, and that would be at 40.7875. There should be. That's all it says. Okay, let's get back to our story. So in the semiconductors, there's been a fantastic move. I mean, 196 to 254. I would say that that's pretty darn good. And look at the weekly chart. Look at the way the weekly chart has formed a very large rectangle with a cup formation and all these different trend lines, etc. I don't want to go through them right now, even though it's Technical Friday, other than to say, look, the MACD is good. Stochastics at 89% and strong. The on-balance volume is weak. That to me is a negative. The 9 is way over the 14, and the price is way over the 9. So far, this is a peak D holding in a little rectangle right here, a little mini rectangle, and it says that if there's a close below 235, you've got to extend that rectangle down to the 233 level. And if there's a break to the upside, I think it's going to be tough to do right now. But if there is, that is really positive. And that says it's helping. This is the weekly chart, got a beautiful cup formation. It has until the week of the 3rd of March to get to this high that was at 284.42. So that's very good action. It's not, I don't see this as bearish right now. I just don't see this as bearish at all. So LRCX, I had an email yesterday, it came in during my show. I didn't see it for some reason. I just didn't see it. Sheriff wanted to know about LRCX. He's had it for some time. Oh, did I type that out? Yeah. Okay. Let me see. I can put this in here because I'd like to read that. It was very nice. Usually I just go through the question and I just LRCX. Oh. So let me put the next thing is there it is. Yeah, there we go. Lattice Semiconductor. Oh, I put Lam Research. That's wrong. It's called Lattice. I should know that. I mean, I've been doing this for decades and decades. Lattice Semi. Okay, good. So obviously in the semiconductor area. So okay, there we go. Can you please cover LSCC if possible? I want to know if I should hold or sell. I entered at $25. Thanks, Sheriff. So, wow. All I can say is Wait, let me just do this. LSC. Oh, I'm looking at the wrong thing. LR. This was Lamb Research. How dumb can you be, huh? Semis. He's looking at a lattice. Hey, how could I have done that? LSCC. Oh, man. Oh, no, I've done this. LSCC. That is semiconductor. Sorry, I just made a mistake. That was just a dumb mistake. It's had a spectacular move. He's in the 25 area, and it's trading at 87. It's actually down 2.65. I emailed him back yesterday before the close to say, or just soon after I saw it, to say I would do some money management and just take a little bit off. That's all. And he said, I'm going to wait for you tomorrow. But yesterday it was trading in the just about 90 points. What was it about yesterday about the time that I saw it? It was about 91. And now it's at 87. So it's not a big deal. He's in from 25. But I'm going to do this. I'm going to recommend that you take something off. That's part of money management. If you haven't taken off anything yesterday, I'm not going to tell you how much. Just feel very comfortable that you're taking something off. And if it goes higher, you still have your core position. That's fantastic. If it starts to stall at a double top here and pulls back, hey, if it just gives back a week's worth, it's down to the 80 level. So yes, it's 10 points, but you are in a huge gain. So I'm just saying money management wise, I would definitely take something off. And then I would try to manage the rest of the trade. In fact, since you've been in since 25, it means that you've actually been in since you watched it go all the way to the 80s and then plummet down to the 50s. If you're in at 25, you must be in from 2020 or very early 2021. No, it had to be 2020. So you've been in for a couple of years. I don't want to mess with that. Obviously, you got tenacity. You've held it all the way through from the 25 area to the 83s. Look at this. That is semiconductor. It hit 85.45 in November of 2021. Then it got cut in half. It went down to 43.41. That was in July of 2022 last year. And here we are, some 8-9 months later? 8 months later, and we're trading at 87, all right, as we speak. So I'm not going to mess with it. I'm just going to say take a little bit off. Let's look at it again tomorrow on maybe Tuesday or Wednesday. I'll put down Wednesday. So Wednesday, we'll look at it again.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Hi folks, let me just do this to show you again. Right here in the 1 minute chart technical fighter, I use this as a phantom peak, and one of the reasons is the stochastic suddenly started to fail very quickly under the 80%. I don't like that. When it does that quickly, it says you're a little vulnerable there. So it could take a little longer for this 1 minute. I should be mixing it with the 1 and the 5 and the 10, but I'm just doing the 1 and the 10 right now. I don't have time to do much else. So this could still go to a D. I couldn't tell you how many times I've got a phantom peak, and eventually it does resolve itself. Doesn't always, and you've got to watch that stochastic in this particular instance. But the 9 is still holding over the 4, and that's a good sign. All right, let's just get out of this. Let me go to something else here. So LSCC, which is a lattice semiconductor, doing very, very well. The MACD is good. The 9's way over the 14. The price is way over the 9. The stochastic is at 89% on balance volumes, a little bit overbought, so it should pull back. It's pulling back today. I said to take a little money off, just part of money management. You are in for the long haul. I would not have been able to stay in from the 80s to get cut in half in this particular instance with a pricey stock like this. And you did it. Therefore, I congratulate you on your tenacity. But now it's just time to take a little bit off. And then we'll talk about it again next Wednesday. All right. Now, I did the semiconductors. Let me show you something else that I think is quite important here. Within the context of ARKK, this is the Kathy Wood, it's her ARK Innovation ETF, 125 down to 29. That I'm not sure. As I recall over the years, when I've seen fund managers take that kind of a hit, I don't know, maybe she owns I don't know, does she own this? Whatever it is, they're out. They get moved aside. They get another fund, a smaller fund, and it's just very quietly, they just kind of disappear. So she has a lot of power, I guess. But what's really important about this, if you look at this fantastic move from 29 to 45, look at it in context. Look at this kind of, in the show coming up at 9 o'clock, if you're listening live, you'll be hearing Tommy Jr. doing his morning market kickoff. He talks about this all the time, how percentages can be so deceiving that you can get a huge move, 29 to 46%, was it 36%? I haven't got, I'm just guessing. And yet, you are down from 125 to 29. I mean, that's embarrassing. And I don't know why she's still there, but she's there, mainly because she keeps saying that her fund is a very long-term innovation of sectors and stocks that have the creative ability and the business tenacity to be able to make major changes to the world. Really, basically, that's what she's saying. And I'm saying, price is price, and if you're going from 125 down to 29, you should be responsible for that. She gets rewarded. Anyway, that's what happens. So that's enough for that. So the semiconductors, And what I wanted to say is that this is an area that I think is going to be hot at different times in 2023. It's had its run. I think now it's digesting the gains, and it should have another run. And now I'm not saying to dismiss it. I'm saying this is a really important moment for ARKK, that type of thing. I'd include the XLK here, which is the S&P Select Spider Fund. I'm saying that this is the whole idea of technology cannot be dismissed. It's what resolves problems in the big context of the economies of the world. Remember, I've said for ages now, you've got to think of semiconductors as the oil of the 1900s, 1800s, 1900s, and 2000s. It became a commodity, an absolute necessary commodity, just as the semiconductors are absolutely essential to almost everything we do, except maybe grow apples. Actually, even deer tractors have technology and semiconductors. So now let's just go back. And the reason why I said to subscribers that I don't want to get very bearish here. And I spoke about the SPXS. See, now look, here's your peak D. What I tend to do is I say, all right, you can keep that as a D and make this an A, but no, you really didn't get a full D. So maybe this is your D right here. And remember the cup, oh, I never finished it. The cup formation, where I go from the left side, number of bars, the symmetry on the left side. Look at this. Symmetry on the left side. You go to a midpoint right there, and you go click. You don't have to have all these gadgets. You can just have a straight line, make it gray on one side and dashed on the other or something. Just make it differentiated. Here we go. And look what we've done. And the reason why I love what's going on here, and I love those intraday smashes to the downside, all within the context of the rectangle. Look at this. It's 2 bars early. Isn't that amazing? I just love the way that works. I am calling it D for now because we really didn't finish that C. I suppose I could say, yeah, you took 1, 2, 3, 4, 5, 7, 8, 9, 10. Remember, 1, 3, 6 is my rule of thumb for consolidations. But now you've got your D in the 10-minute chart. So that's what we were looking at. And I believe in the den, someone was saying, I'm waiting for the D in the 10-minute. There it is. There's your D. Very good action. Now, is this a brand new A or D? You don't have to make your mind up about this. Look, this is excellent action. You've got good support, the 9's over the 14, and just deal with it that way. All right, let's get back to our story because I said I want to look at the bigger picture. IYT. There's no bigger picture than the IYT, which is the iShares Dow Jones Transportation Average Index Fund. About 8 different articulations. And what do we get? We get an index that when you think about it, if we are in this depth of a recession type phase, 282 down to the 190s, 90 points, it gets cut by a third, and it's still holding pretty well. I must say that this overall, as an index, you remember CSX, you've got your rails. Look at CSX has gone from the 37 area down to the 26s, and it's trading right now 31, struggling a little bit. Why? Wasn't it Allegheny or something? Oh, why is gone? Allegheny got bought out. Somebody must have bought it out. All right. So within the JB Hunt, JBHT, isn't that? Yep, there's JB Hunt. All-time high is just under in the 219, 218 area. Goes down to the 150s, trading right now 187. This is remarkable action when you think about it, that we aren't down at the lows. We are at the midpoint for the areas that have hit. Jets, I mean, this is if anybody's flown recently, you know that planes are all crowded and they are squeezing you for every single thing. You want to move your arm to the right, it'll be a $5 fee. If you want to move your left arm closer to the window, it'll be a 15. Yeah, whatever it is. You wink, or you blink, whatever it is. So isn't that amazing that even the Jets has had a spectacular run from 14.77, this is U.S. global Jets, up to the 21. I mean, 50% gain from 14 to 21, 7 points. And here it is. I've got this at a PP. It really looks like a D, but it's holding steady. So this is just saying to me that I cannot get overly bearish. We are wanting to buy. We're trying to buy. We have been buying. But on the very short term, I think that we need to just be a little careful right now. It's a big digestive phase, rotating through different sectors. And NUE was the steel company. Did they come out earnings or something at 169? Close to the all-time high of 187. Not bad.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metal sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, JDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
So it's Technical Friday. Look at the difference between that peak D right there. Remember, there I used the phantom peak. Here I said, I'm going to call this the D that was missing for that phantom peak. And therefore, it's because it's in this cup formation with the beautiful symmetry of the bar, number of bars on the left and number of bars on the right. It was 2 bars, 1 bar early, and it broke above into leg D, and then pulled back sharply back into the rectangle formation right here. And that says, this is what we're looking at today. And here's your leg D, probably a peak D in the 10-minute charts. So just be somewhat careful. I see buying coming in. I would have preferred if the buying came in a little later. I don't like all the buying before the market opens. That means it leaves us a lot of room to sell. But in the meantime, I do think that things are holding very nicely. So let me just real quickly as a summation for the next 3 days. Monday, so question about deer. I'd say hold off on deer. You'll have a chance to get deer. I prefer it's at 402, 418, right? Oh, it's up 18. It's up 18. Oh, I don't know what is that. Oh, that's earnings, right? Earnings came out. So I like the fact that deer's there, but I'm going to say just market-wise, let it pull back a little bit. This whole area, I'd like to see a test of the 410 to 400 area. I was going to say 398. I didn't realize earnings came out. I like it. I think it's in the right area. It's in this whole industrial area. I like it, but I wouldn't want to buy the gap. I'd rather buy a pullback. I'd have a little patience. I think there is time. All right, here we go. So in the Dow, The Dow is consolidating. The reason why we've raised cash is we've got this PT. We're in this. Let me go to the YM for the moment. We're in this area that says should continue consolidating. If there is a close below 33,400 today, it makes next week real tough because that whole 33,000 area could get tested. If, in fact, by the end of the day, it actually holds sideways, it says just be ready for a sideways, very choppy consolidation phase. And yes, you could test 33,000, but I prefer it if it actually rallies first before it does that. Looking at the S&P, the SPX right now is trading down. Oops, the S&P, let me go to the E-mini to show, the 200-period moving average is at 40.76. The 200-period moving average is at 40.44. And here again, I think a rectangle formation, a big digester phase, very selective. I want to see certain areas come down so that we can get into positions. I'm looking more to buy than to sell right now. But next week I will start looking at my concerns coming up over the next few weeks. But in the meantime, I do think we've got a consolidation that's unfolding. Have a great rest of the day. I'll be back on Tuesday. Check out my opening call. See you soon.
You might think that if you want to be successful at trading in the stock